Hello, welcome back everyone. I'm really excited about this next panel discussion that we're about to have and this opportunity to have a different kind of conversation than we've been having so far. We've covered a lot about placemaking and a lot about the steps you can do in your community. But what we want to bring to you now is to talk about innovative funding approaches. Traditionally, in all of our rural communities, we've all heard the stories about grants and accessing grants and how to get grants, or maybe this traditional way of funding things. But what we wanted to talk about were some of those other approaches that you may not have heard about, either through investment and stacking capital, or we also have a perspective from someone on a foundation in the different innovative way that they are really supporting place-based efforts in small communities and very specific intentional methods. So first, what I would like to do is introduce you to Alex Dunlop from the LOR Foundation. And Alex is going to share with us about their foundation and their mission and some of the reasons why they invest in place-based, but also the strategies they use to do it. Alex, take it away.
Thanks so much, Melissa, and thanks, and hi, everybody. It's really great to be here. Thanks a lot to the university and to USDA for hosting this. I mean, it's amazing how many sort of hands-on and like tangible resources are being shared yesterday and today, as well as I know on the very exciting new toolkit being launched today. So Laura is really excited to be here. And so I'll share a few things about LOR and about how we work and a little bit about the funding that we do and the community work. I'll have a couple examples, and I also look forward to your questions. And I guess the thing that I would like to sort of pose with you at the outset, and something maybe you can chew on for these few minutes, is, you know, where do you go if you have an idea? Because we all have ideas about, like, you know what, my town would be so much better if we just did X, right, or did Y. So I wonder, like, where do you go to talk about those ideas? That's a question that you can chew on, but also feel free to ask other questions. A few words about LOR. We're a private charitable foundation. We work with people in rural places to improve quality of life. We work in five communities currently in Colorado, Montana, Wyoming, and New Mexico. Soon, actually later this year, I'll say we'll start working in Idaho as well. And we focus on the Mountain West United States. We have a small hub in Denver, but really our work is based in the small towns and rural communities where we work. Listening is the first word in our mission statement, and that's because it's the most important thing that we do. Our community officers are from the communities where we work, and you'll find them not in an office, like sort of waiting for things to do, but you'll find them out and about in town, having coffee with people. You'll find them in meetings, at school board meetings, at town council meetings. You'll find them on walks with community members. In fact, during the pandemic, you know, with the restrictions of varying degrees coming through, our community officers got in the habit of scheduling meetings outside, and actually found that sometimes, you know, when you're not at a conference room table or in an office, even better ideas come from those conversations. And so a lot of them have taken to doing that, and they're still doing it today, which is great. You know, at LOR, we fund community-driven ideas. The work we do is quick, it's responsive, and it's based on community need. You know, we've identified, we think about quality of life a lot at LOR and what makes the town a hometown, a special place to live. And we've identified 8 sort of broad areas of livability, and you could probably guess all of them right now if you tried. What we don't do is come up with a program in those 8 areas, right? We don't have a program in transportation that you need to follow in order to improve the transportation system. We don't have a program in education that, you know, ask others to follow. Instead, we listen and work. We listen first. We work with the community to implement their ideas. When a local person comes to us with an idea to make the town a better place to live, we try real hard to help that person realize the idea. Sometimes that help comes in the form of a grant, and other times it's about connecting people with others, sometimes other funders, you know, state funders and other even federal funders who are better positioned to help realize the idea. And sometimes it comes from a connection to an expert or other resources. You know, we don't have grant deadlines, we don't have RFPs, and we don't have applications. We just have hold a lot of community conversations. We like to say that we work at the speed of community. You know, this approach is true with our placemaking work too. Like I said, we don't have a sort of an approach that you need to follow and that will work everywhere. But instead, what we do follow communities' stated priorities. I think what makes our work innovative is that we respond quickly to people in community, and those are the people who champion the ideas, and we help them through various ways, not always funding, to realize those ideas. And what we find is that this produces a diversity of ideas and solutions to challenges in livability. A couple examples I want to share with you. One comes from Lander in Wyoming, where an artist notified our community officer that she and other artists were facing a tough time getting their work out, selling it. And this was during the winter of 2020, difficult time for sure. Our community officer helped them launch a pop-up holiday market on Main Street in Lander. And that market for her and other artists in the community wound up helping them boost sales by 200% over previous years. You know, I said a minute ago that, you know, we don't come with a program or a one-size-fits-all approach, and that's true. But what we try to do is share what we learn wherever we can, so that others can more quickly put their ideas to the test. And those ideas could be with or without Laura's help. In this case, in the holiday market case, we developed a toolkit on how to plan and host a pop-up market, some things so you can get started quickly. And I've shared that link with Sarah and Melissa so they can share with the group. And I know, speaking of toolkits that our hosts at USDA have, you've seen the toolkit that they have launched, another great resource. There's another toolkit type resource for some work in Jackson that we did as well. And I'll share one more thing. Speaking of new releases, just a bit of breaking news for Lore, and it's very soon, I'm told, not today. I was hoping for today, but it looks like it's going to be very soon. Lore is launching a solutions, kind of a database, a collection of all of the solutions that we fund. And it's designed to be very transparent about what we fund, where it's taking place, how the idea came about. It'll eventually include all of our solutions as well as the toolkits and examples, and we'll link to the stories that we wrote if we wrote a story. And the whole idea there is to sort of like share these ideas in the name of, you know, you can have a good idea too, and you can launch something. Maybe it looks like the Lander holiday pop-up market. Maybe it looks totally different. But our bet is that with more ideas out there, we'll produce more and more diverse solutions for making your town a better place to live. One more example in Lander, and like as in response to potentially like, is it just a one-off holiday market? Sometimes yes, it's a one-off sort of effort. In Lander, what happened after the holiday market was, you know, one of the artists approached us with an idea to secure a permanent space for artists to do their work and to sell the work. You know, this was one artist's vision, to remake an old saloon on Main Street into an artist studio and retail space. And it wasn't Laura's idea for sure. Laura just helped it along the way where we could. And in this case, it was a series of small grants for some rent assistance for the artists, some marketing work, and some public facing art for the outside of the facility. And there's a picture, one of the links I think is a picture showing that installation. I don't want to take too much more time, but I did want to share one example of what we did in Taos in New Mexico. There, an artist collaborative brought forward an idea to showcase the work of local artists in what were then vacant storefront windows. These installations were curated, and we helped set up like a kind of a juried panel and the panel helped the artists kind of curate the work and to install it. And then we helped install those installations in the storefront windows. And what happened there was that these installations triggered a community conversation about the kind of community that Taos wants to be in the future. And that was the main point of what the artists wanted to do: share their work, get the communities talking about stuff that they care deeply about. So, and finally, one more word. I'll just close with one thing, and then I'd love to hear your thoughts either now or later if there's a later time for questions. This panel is about innovative funding for placemaking. While all of the ideas come to us from places where we live and work, our approaches could be considered innovative in the way we're able to quickly respond to ideas that surface. We find that innovation lives in all of our communities. The best ideas come from not some think tank or experts, although experts have a role for sure, not to disparage any experts out there. But good ideas come from the community. And the trick is to identify that moment when the idea, as well as a little bit of space to realize the idea, a community champion, because a community champion is always needed to execute. When those things come together, if you can find that moment and execute quickly and capitalize on the idea, we think great things can happen. We often think small in order to think big. If the arts community comes forward with an idea, ride that train. The economic development folks, the folks who are thinking about the systems needed for the town to be more prosperous, like, get ready to help them. The cycling club, for that matter, they probably have a good idea too about how to make the town a better place to live. Many small solutions today, we believe, add up to something big later. And for those of you who live in small towns, this better than any, very well, like, all those ideas contribute to making your hometown a really special place to live. So thanks a lot, Melissa. That's all. That's what I got.
Thank you. We do have a couple questions coming in, and one of the questions I'd like to ask is, as a foundation, what are tips that you would have to others to remove that red tape barrier? For example, traditionally, sometimes trying to apply for funding winds up being a relationship where it's an extensive grant application, or you need to do this scope or that scope. What would be your advice to others to remove that obstacle for communities?
Yeah, so to other funders.
Yes, please.
Yeah, it's a great question. One thing that we did early on was to really look hard at the requirements. When you look hard at the requirements for what you have to do as a private foundation, yes, they exist and you have to report, and those are no joke. I'm not saying you should disregard them, but if you boil them down to the actual essentials, you find that what you have to do doesn't require a whole quarter's worth of deliberation. And so really looking at those things and finding out how can I give to an individual? Does it have to be a 501c3? That's easier for a foundation, but it's not actually a requirement to only give through to a 501c3. You can find fiscal sponsors in places to help speed up the process and to facilitate the giving. The other thing that stumbles a lot of foundations, I think, are the kind of the board, and the boards are important, don't get me wrong, for sure. But if I were a funder and we had a slow, a docket system that like trudges through on a quarterly basis, or even sometimes a half year or an annual basis of these applications, I would talk to my board and say, and if this is true, don't make something up. But if it's true that you're getting ideas throughout the year and you want to execute on them more quickly, then ask the board, ask them directly, is there any way that we can speed this up? Or set up a special sort of sub fund that we can act on quickly. Because if you want to act on and to help realize these ideas to happen quickly, the board will get behind it. They want the same thing you do. There might be some patterns and some regulations that they feel they have to step through and maybe they can change them.
We have one more question for you, and then we'll turn it over to Geoff. But it says, how do you weigh risk versus fast? They say, I love fast, but it comes with a degree of risk. What would you say to that?
It's a great question. And funders are often thinking about risk and reputation and so forth, and all very true. The main thing that we do to reduce the risk is that the community officer is in the town and knows the context. I'm always amazed at how sometimes nuanced, but really just kind of detailed the origin story of these ideas are. Where if you look at if something comes forward and you're like, where does that idea come from, and what were the conversations that led to it? Then you can find out. It will be easier to sort of mitigate the risk. I mean, there is always risk in grant making for sure, because you're putting funds forward and realizing an idea. But if you know the backstory and the context of where that stuff comes from, then you're going to do a lot. Then you'll be evaluating the thing itself, but also where it came from, and that will help you to sort of guard against the risk. That and we have a lot of trust in our community officers because they know the people, they know the long story that that has been told and that comes through to bring these ideas forward.
Well, thank you so much. We really appreciate you taking the time to share. And I've just loved learning about your foundation and the Lore Foundation and the place-based intentional listening approach that you use. And those links have been dropped in the chat, and people are already checking out those resources and really excited to learn more. I really appreciate it. Thank you, Alex.
Great. You bet.
Now we're going to turn it over to Geoff Marietta. And you're going to hear about a town that you've heard about a few times already in the past 2 days. Geoff is going to talk about a project in Harlan, Kentucky, and the way that he's focusing on a bit of innovative approach to investment. Geoff, please take it away.
Yeah, thanks, Melissa. Hey, everybody. Thanks to the USDA and SEDEC and everybody for hosting this conference. So I wear a bunch of hats, and I just got to give one plug for Invest 606, which is a small business accelerator and pitch contest that serves rural Appalachian Eastern Kentucky that I founded a few years ago. And that has sort of spurred a lot of different economic growth here. But the program is a pretty basic small business accelerator. You apply, we have 3 key in-person events, and you earn points by attending mentoring and training. And then there's a $15,000 grand prize, an $8,000 second prize, and a $4,000 third prize. And we adapted that program specifically for rural communities. Most accelerators require a bunch of in-person events, but we basically try to do it, one-on-one business consultation, and we provide businesses with $1,000 in training money that they can use however they want. And then at the end of the program, businesses also have access up to $25,000, very low interest, 1.5% to 2.5% reimbursable interest loans in terms of 5 years to 7 years. So that whole program, I'm the founder of that, and I kind of wear that hat. And And then I'm also, very active myself as an entrepreneur in the region, focusing mostly on real estate and coffee shops and cafes. And the latest project is a brewery in Harlan. Harlan County was dry up until 2015, and then it became moist, which if people don't know what that means, it means you can have a drink in a restaurant, but you cannot buy it anywhere else. And then in 2019, they finally went wet, which means you can buy alcohol, at a liquor store, or you can have a brewery. And so a business partner of mine, Gil Holland, whose father was born in Harlan, decided to try to put together a brewery, Harlan County's first legal brewery. And we did it in a little bit of an innovative way. We actually did our initial raise on WeFunder. And for those of you who are not familiar with WeFunder, I'm just going to show you, this is our page off of WeFunder. This isn't grant, this is what you would call investment. Now, you would call it, people in finance wouldn't call it investment, because we actually used a debt instrument, a revenue share debt instrument, and which is absolutely key to rural America and small businesses. So you're not asking for equity investment. You're asking people to basically lend you the money, and then we'll pay that money back through sharing our revenue. And the terms are pretty simple. We'll pay you 2 times whatever you give us, whatever you loan us, using 10% of our revenue, and we'll pay you if it takes us 5 years to pay that back, if it takes us 7 years, if it takes us 8 years. But the thing is, if it takes us 7 years, which is our projection, that's still, close to a 12 to 14% annualized return. So revenue shares are super key, and you don't need to use WeFunder to do it, but WeFunder, it's a heavy lift. It's not easy, and you can see you have to build a business plan and everything. But you build your customer base while you're doing it. And you can see here, we actually raised like 330,000 from over 350 different investors. And so immediately, you have a customer base there, fans who care, who want to come to the opening. And these people are from all over the United States. Many of them are Harlan people, and many of them have roots to Harlan. As most of rural America over the last 30 years has seen sort of an outward migration. So, I grew up in a rural town in northern Minnesota, Hibbing, Minnesota. If there's any Minnesotans there, shout out to you all. And left, and then eventually found myself back in a rural community through where my wife's from, here in Eastern Kentucky. But these kinds of platforms can be used to really connect to customers who may or may not ever visit your community in whatever rural community you're in. And so what we did is we did that, and we people talk about stacking capital, and I never understood what that meant. And I have my MBA, and I've started companies before, and I started hearing people talk about that. And I was like, what does that even mean? It's, and so I can finally tell you what it means, because I've actually done it. So we took the WeFunder raise, and then we took some money from a CDFI, and then we took some of our own equity capital, our own money, and then we took some sweat equity, a ton of sweat equity, especially on my part, and we stacked that all together. And we've been in the process, we renovated and I'm going to show you some pictures here. This was and I hope, can everyone see that? So this was a historic building on the courthouse square in Harlan County. It had been vacant for about 20 years. That's what it looked like. It had grass, that's green carpet, but it also had grass growing on the interior of it. When we bought it, there was immense structural damage. But it was right on Courthouse Square. Courthouse is on the back. It had this awesome entrance. It was a office equipment building. It was an electronic appliance store. That's what a lot of people knew it as. And there's the grass. Hold on, let me go back. So, this building was going to fall in on itself. And of course, it was owned by wealthy people who still thought the value of it was super inflated, which I'm sure a lot of you understand that. But we went and we negotiated in good faith effort. And this is actually of the Portal Pizza place that in Harlan. They got this great, here are all the historic mines in Harlan. So I think maybe one of which is still operating. And so we took that, and it's been a years-long process. And let's see, let me give you, here is where we're at. We are right now weeks away from opening. We took the historic tin ceiling tile that we've uncovered from the drop ceiling, and we use it up on the bar. We use it up on the wall, on the upper parts of the wall. That's a mural that we just painted yesterday. So some of these pictures, and we use the reclaimed wood from the floor joists and the ceiling joists. Here's the bar, and then the brew house is over here. And and it's been a wild ride. I think just putting it all together and taking on simultaneously renovating a historic property and also opening up a new business. And so there's a lot of lessons that I can talk about in questions, but what I'm going to say is, if you're in a rural community, especially an impoverished rural community, you have to simultaneously invest and build the pipeline of entrepreneurs and investable entrepreneurs. And you need to make sure they have access to what I would, not only free grant money, not only do they need access to resources like Invest 606 that offer $1,000 in training, everyone gets $1,000 no matter what. You need to give that, and you need fair lending. You need to give them access to very low interest, reimbursable interest loans, I would say in the $5,000 to $50,000 range. Those above that, I would say if you're doing a riskier project, they should have access. In some places like in Invest Appalachia and some other places are experimenting with larger amounts, and that's great. But the 5-year, 6.5%, $50,000 loan is going to sink any startup small business. And so those two things I would say are absolutely key to kind of, this diversification especially of, commodities-based industries and communities that rely solely on those. So I'll stop there and see if there's any questions or comments or anything.
There are some questions and also several comments of people who just really, I think you're introducing a lot of new terms. I mean, I will be very honest and say, because as our group knows, I was really honest in the last session too. I didn't know what stat capital meant until I talked to you on the phone, and you said it and you explained a little bit. And then I also got on Google afterwards and I Googled a lot of what, and so it brought to mind some new information for me. So that was really helpful, because I don't think we always give our communities access to this kind of conversation and this kind of approach. So one question we do have that I know you probably knew you were going to get is, what happens to the investment for those people who invested on that 2-to-1 return if you're unable to pay that back?
It's collateralized, so they can have the brewery equipment and the kitchen equipment and everything else. So, okay. And you have to imagine that, probably 250 of these people are investing at $100, and that's a lot of money to some people for sure. But, I tell people on that end, if you want to see your money and how it's invested and what it's doing for you, walk by our window, and look. Every single one of our contractors, every single one was Harlan County born and raised. And, I believe in the democratization of investment, and the stock market is a gamble. And you might as well just try to shift and use some of these tools, take your money out of the S&P 500 or the NASDAQ or whatever, and invest it, try to find these types of investments. I guarantee you they're safer and going to have a better return, if you properly diversify, of course, et cetera. But it's just right now, as we see in our world, it's all, there's monopolies everywhere, and duopoly in our political system, and monopolies and duopolies in the other business sectors. And so we really need to combat that. And I'm hoping this is one way we can do that.
I really think that that's the advice that people need to hear in the shot in the arm. I know that particularly in the past 10 years, there's all of these different types of investor platforms and these startup funds, Kickstarter, all of those things. Can you speak a little bit to being on one of those platforms? What does that business get out of it? Is there a percentage that you pay of what you raise?
Yeah, and you need to be aware they're not, a silver bullet by any means. And they're, so what happened was the SEC, which regulates investments, a couple of years ago, a law was passed that allowed what's called regulation crowdfunding, and everyone in the industry calls it Reg CF. And what that means is it allows people to invest, allows people who are not accredited investors, which generally means you have to have over $1 million of investment. It allows people, regular people like us, to go and put in $100, $200 into a company. And so it proliferated all these different crowdfunding platforms. Now, Kickstarter and some of these other ones, GoFundMe, they're not regulated by the SEC, really. So GoFundMe, that's just a grant. Kickstarter, they're promising your product in exchange for a small investment. WeFunder, and there's some other ones out there. WeFunder is the biggest. You're signing SEC documents and investing in the company, and you have a loan agreement that is being countersigned, and you have a stake in that company. WeFunder takes 6.5%. They're a kind of a startup, so there's some glitches that they're working out. I'd be more than happy to talk with anyone. But the main thing you need to know, and everyone's probably figured this out now with GoFundMe and Kickstarter, you can't just throw it up on Kickstarter or GoFundMe and the money starts raining in. It takes a lot of work. In fact, it was harder for us to raise the money on WeFunder than it was to go to the bank. Because I had to put together like updates and, use their platform and, send out emails and all this sort of stuff. And then also, just like anybody who's starting a business, there's parasites out there that hang on to these platforms. And so you're getting emails from hucksters being like, oh, I got a list of, 1 million accredited investors, and they'll, let me blast out yours and I'll just take a small cut. And, so that sort of stuff happens all the time too. Just like, anytime you start a business, you got people calling you all the time trying to sell you stuff.
Mm-hmm. Alex would like to ask you a question, so I'm going to let him ask you.
Cool. Yeah, no, I couldn't resist, Geoff. Love the presentation and such a great story. I wonder about that, the regulations, which I assume are county regulations about sale of alcohol, and like, how did those come about? And were you part of it, or were you and other business owners part of it? Because I could see that as like a very clear kind of like barrier. And how did that change?
I mean, I moved to Harlan. My wife and I moved there in 2015, and I was, generally talking with some of the organizers who had lived there their whole lives, and I helped them, sort of, hey, like, let's look at, this Pineville, this local community. What did they? Oh, well, look, they found, that no increase in crime, and they were able to purchase 3 new squad cruisers. And then you start looking at some of the research, and there's been research that shows that communities that are wet actually have a decrease in drug addiction. And, and so you just put that on a little pamphlet. And so that's all I did. I helped them, but it was totally community driven. And then the thing is the churches didn't get, normally they would stand up and say vote against this, but they were quiet, and then the measure passed 2-1. So, I think everyone saw the writing on the wall and just knew that there were bigger problems to deal with than, trying to fight against selling, a mug of beer. But I would say when we launched the brewery after this, there were some people on Facebook and stuff who were like, this is the last thing we need, and I would go on there and say, hey, look, we're a full service restaurant too. If you don't like to drink, don't go, and plus don't go to the Mexican restaurants that sell beer too, or the other places, so not gently pointing out the hypocrisy.
Yeah. It's a good example of a barrier to an idea coming forward, right? Where like, if you remove the barrier, then look at what good things can happen.
Thank you both so much for this engaging conversation and these ideas. We have about 7 minutes left, and I do want to give our partners at the USDA an opportunity to talk about, Geoff, you mentioned combining this approach that you're talking about with grants and with resources like that. And the USDA has a little bit of information to share, but then we may, if Alex and Geoff, if you can stay on for questions, just in case we have any more after this. Chris, I'd love to turn it over to you.
Fantastic. Thank you, Melissa. I am Chris Seaver here at Rural Development, specifically in our section called the Innovation Center. My group is the the Regional Development and Assistance Branch. We are centrally and integrally involved in putting the RPIC program out, the Rural Placemaking Innovation Challenge, which I'll get to in a minute. But if I could just take half a minute to thank the University of Kentucky, Melissa and Allison and their team have been amazing in putting this, orchestrating this event over the last 2 days. Amazing job. And it also, I know this is patting myself on the back a little bit, but I also want to make sure I thank the Innovation Center and its leadership for putting the funding forward to underwrite the toolkit and this event. And we're really looking forward to doing a lot more as we move forward. But the one thing I wanted to really sort of emphasize with folks is rural development has a ton of programs. I can't begin to really go through them for you today, but they are all available to peruse on the RD website, and we're going to have a few links put into the chat so that you can easily get to the RD website and get to the main program areas. So I'm going to give you just a very high-level sketch so that as you're thinking about funding and your capital stack and what you need to put together to do projects and get your placemaking plans realized, you'll have some sense of where to start to go. Rural development has over 40, probably 45, I've lost count, the number of programs. They fall into three kind of big buckets. There are housing programs, there are utilities programs, there are business and cooperative programs. Within that, you start to drill down in housing. It's not just single family multi-housing, but it's community facilities. So you need a library, a firehouse, police station, the utilities, it's electric, it's water, environmental, telecom, which includes high-speed internet, which you're probably going to be very interested in as you think about placemaking. The Rural Business Cooperative Development Service covers this whole bunch of business programs, cooperative programs, and in addition, energy programs. You almost can't imagine the variety of programs that you can tap through rural development. The thing that I would sort of emphasize is, think about your plan. Go through your planning process. Use the toolkit. Maybe RPIC, whatever it takes to do your community planning, your placemaking planning, and you figure out, what your assets are, what your needs are. And then you hit these programs, you start digging in and you figure out where are the particular programs that are going to help you realize your plan and success for your community. So this is supposed to be the innovative panel, funding panel, and we are kind of the traditional funder, government funder. I would suggest where it's innovative is how you use our programs. For example, a lot of folks are doing things around recreation economy, outdoor recreation economy, especially in conjunction with placemaking. And you won't find a program at RD called recreation economy, but you will find a lot of programs that can be slotted into a recreation economy strategy for community development in your community. The one sort of standalone program that I did want to get to, which you've heard about in earlier sessions, and I mentioned just briefly, is the Rural Placemaking Innovation Challenge. That is actually run out of the Innovation Center, as opposed to the three main program areas. I think in part because it is, super cross-cutting, and that it's, a planning program. This is a program that funds your planning efforts, funds training and technical assistance to help you put a placemaking plan together, go through that process, so that you can implement placemaking in your community. Again, we don't have time to really dig into it. I've asked one of my colleagues to put some links in the chat to take you not just to the RD program pages, but specifically to the RPIC page. You will notice that it is information from last year's RPIC program, and that's all going to get updated hopefully fairly soon. Mid to late June is my hopeful target for our third round of RPIC funding. Like I said, these are really planning grants. They are cooperative agreement in form, which means you work with RD to implement your project and your planning process. They max out at 250,000. You don't have to ask for that, but that's simply the max amount. It is a competitive grant process, and we only, you say it once and you're like, oh, $4 million this year, so much. And it is a lot. It's a lot more than we've had before. But in the end, it isn't. We aren't able to make that many awards with that funding, which is partly why we have been really keen on expanding the placemaking knowledge and tools, because you don't have to have an RPIC award to do placemaking. As we've talked in multiple sessions, bootstrapping it, starting small, using the toolkit that we're putting out here, you can get a lot done. But if you're interested in RPIC, keep tabs on RD communications. We're putting in the chat a couple of different ways to keep tabs. You'll want to sign up for the Innovation Matters newsletter that the Innovation Center puts out. But there's also a link to sign up for updates on all things rural development. So if you sign up for both of those things, you're going to get information when RPIC drops, and we start taking applications for that. So I will stop there because I'm sure that I'm out of time. 1 minute. Hopefully there are no questions, but thank you for having me.
Thank you so much. And Chris, you've been on the boards already, so if there's any more questions, I know they can jump into the chat. But I just really want to thank Alex, Geoff, and Chris for taking the time to join our panel. I feel like this was such a really helpful way to look at all these different approaches to funding and help us start to think more creatively and outside of the box. Thank you all so much. There have been some great questions, and Alex, I appreciate your time. Geoff, I really appreciate your time as well. And if we have Any other questions? I may send them your all's way if there's anything to follow up, but
Let's do.
otherwise, we are going to go ahead and go on a break, and we will see you back here for our next panel, which is our technical assistance provider panel at 4 o'clock. Thank you all. Make sure to remember to follow your agenda and hop into the next session, and we'll see you there. Thank you.
Thank
Thanks,
you.
everyone.